Hello, everyone. What if I told you that some of the biggest names on Wall Street just made a massive move into one small AI company and most retail investors barely noticed? That's exactly what's happening with Datavault AI, trading under the ticker Dvlt. Over the past few months, something dramatic has been unfolding behind the scenes. And it's not hype, it's institutional money moving in at scale. Between the fourth quarter of 2025 and February 2026, major asset management firms didn't just add a few shares, they multiplied their positions in a way that turns heads. We're talking about serious conviction. Let's break it down. Vanguard increased its position from under 500,000 shares to nearly 12 million shares. That's not a small adjustment. That's an aggressive expansion. State Street followed a similar path, growing its holdings from just over 300,000 shares to roughly 10 million. And Blackrock, they went from about 136,000 shares to more than 4 million shares. When you look at the percentage increases, it becomes even more striking. These firms expanded their stakes by roughly 2,800% to 3,000%. That's not normal portfolio rebalancing, that's strategic positioning. Now here's the bigger question. Why? Institutional investors don't move like this without a reason. These firms manage billions, even trillions in capital. Their research teams analyze revenue trends, market positioning, competitive landscape, and long-term scalability before making decisions of this magnitude. According to company leadership, this surge in institutional ownership aligns with Datavault AI's execution strategy and long-term revenue potential. In simple terms, management sees this as validation. They believe large investors recognize the company's direction and growth trajectory. And that growth hasn't been theoretical. Datavault AI has been expanding commercially across both media and enterprise markets. The company points to increasing enterprise adoption, strategic acquisitions that strengthen its ecosystem, and high-visibility partnerships that expand its footprint. So when you combine operational expansion with major institutional accumulation, it creates a powerful narrative, growth supported by capital. Of course, institutional buying alone doesn't guarantee future performance. But when multiple top-tier asset managers significantly increase exposure at the same time, it suggests they see something developing beneath the surface. The real story here isn't just the percentage increases, it's the timing. This ownership expansion follows a period of measurable operational momentum. That sequence matters. So the question now becomes, are institutions early to a longer-term transformation story, or are they positioning ahead of catalysts the broader market hasn't fully priced in yet? One thing is clear, smart money has made a move, and whenever that happens at this scale, it's worth paying attention. This video is created strictly for educational and informational purposes only. All information shared is based on publicly available data and sources believed to be reliable at the time of recording. However, I do not guarantee the accuracy or completeness of the information presented. I am not a licensed financial advisor. Nothing in this video should be considered financial, investment, legal, or tax advice. Investing in the stock market involves risk, including the potential loss of capital. You are solely responsible for conducting your own research before making any investment decisions. Any opinions expressed in this video are personal views and are subject to change without notice as market conditions evolve. Past performance does not guarantee future results. This channel's purpose is to provide market insights, news analysis, and educational content, not to give direct buy or sell recommendations. Always invest wisely and manage your risk accordingly.